Hello traders, Gary Wagner here, just about 10:20 in Honolulu, 4:20 in New York. It is Tuesday, September 13th, and we are looking at the Dow Jones Industrial Average after a triple-digit rise yesterday, a triple-digit fall today. Incredible movement in the market as we have seen it oscillating near these highs, but for the last 3 days, we have had triple-digit moves in the Dow Jones Industrial Average. Today, down 258 points, about 1.5% decline in that index, closing at 18,066. When we take a look at our Standard & Poor's, let's go ahead and pull that up. That down 1.4%, 1.38 to be exact, 21.22. Putting it off about 30 points on the day. You can absolutely see that when we look at this daily chart right here, the kind of oscillation or sandwich we've had as it has traded in this defined range, but with incredible swings to the upside as well as the downside. So traders, we're going to start today's trending markets off by looking at a straight daily chart, standard candlestick format. We can really see the incredible range that we have seen, this increased range. There's been an increase of the VIX, the volatility index, and this market has been a roller coaster ride to say the least. Unlike periods where we have a defined downtrend or periods where we have a nice rally mode ensue, or like periods where we hit these tops and run into a narrowly traded trading range as we have had literally throughout July and August, now going into September. We are truly seeing something different as we take a look at this market trade over these last 3 days. Consider this. On Friday, we were or before the open on Friday, I should say, we were we had closed on Thursday well above these record highs. Now, we did close lower on Thursday, slightly lower. You can see that as it's a red candle. But most importantly, when we consider that for the better part of, say, mid-July in through August, about the beginning of August, we're trading just below that. We talked about the fact over these last couple of months, the fact that we had that scouting party, and that's this candlestick right here. We then really had a beachhead form, and simply put, a beachhead is a period of time where you are now trading above a particular range, and there is absolutely no doubt, we talked about this yesterday also, and that is the fact that we did have 3 days in which the market traded below the record highs, but for the better part of August, throughout August, we traded in that defined range, and that defined range was absolutely in those record areas of the high. Now, that all changed on Friday when the market opened below. You can see that right here. We had this gap below. We truly have a trading gap in this particular area right here. In fact, let me change my cursor here. But this particular area here, we absolutely have a void or a gap. And any market technician will absolutely tell you that that kind of a gap, so to speak, is one that we always look really to get filled. And so we would look for at some point, even if the market's in a downward trajectory, we will look for at some point for this gap right in here to get filled. But ever since then, obviously, we have had this market under some really strong oscillation. We had the market trade down, almost 400 points. Then yesterday, it actually trades to a lower low on the day, coming in at about 2,100. But we had some incredible buying power come into the market as this market not only traded off the lows through the open, but actually came up and made a substantial high and then closed. This is the high, the top of this wick, and then closed in essence very, very close to the high. Now, that was yesterday, and today is again a different story. You can see that the market opened very, very close to the close of yesterday, but through the better part of the day, came down, made a low that was lower than yesterday's low, Excuse me, it was not, because we had the low come in down to this point here, but the low was lower than the body or the open of yesterday, the close of Friday, and at no point really did it have the power to track back up, because there's your open, and as the market came back up, it was only able to close at this point down here, which is why we're seeing a 30-point decline in the market. So where's the market going to go from here? Well, it's an interesting scenario in that we have these tremendous price swings, but they're all within this certain trading range. And as a market technician, it is a much more difficult read. The only read that I can give you with some level of certainty is we do have support that has not been breached yet at 2100. The way this market is trading, it certainly could break through there. And if it does break through these points, the next real level you've got to look at is a 61% retracement. Now realize these retracements are really from this former record high here to these lows here. But that would be the next level. Of course, you do have a 50% retracement at about 2075, but I'm not so convinced that that's where it would go. I think that there'd be more pressure to take it lower. If it can hold this particular price point and area, of course, right now we've got a 23 very, very minor level at about 2126, but we have these record highs up at around 2170 that would have to be taken out. With this kind of oscillation in the market, there is no clear-cut defined trend just yet. All we can really say with some certainty, of course, is that if it breaks to the downside, this is the next level of support. If it moves to the upside, this is the next level of resistance. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.